Welcome, dear traders. You are watching a recap of the Asian session on August 31. Weaker than expected US economic data continues to fuel gains on Wall Street. Yesterday, following the sentiment of the US stock indexes, the Japanese stock market hit its highest level in 4 weeks today. Antibody stocks showed moderate performance in early Thursday trading. August ends with even more conflicting trends than it began. Markets are anticipating the Fed's next move. The interim results tend to support a dovish stance. However, US inflation is still above the 2 and 3% target. At the same time, we cannot rule out a hawkish outlook, and last Friday, Powell's speech at the Jackson Hole summit contained quite neutral statements. He noted that the regulator would act according to the incoming data on the US economy. The US dollar was moving sideways after yesterday's fall amid weak statistics on the US labor market and GDP. The greenback was hovering near 103.20. The fact is that the GDP price deflator came out at 2%, and this indicator measures the yearly change in the prices of goods and services included in the GDP. Therefore, it's a key inflation indicator for the US Fed. Notably, the target threshold for the US regulator stands at 2%. Against a low level of the GDP deflator, the US currency was trading flat. In the Asian trade, it was moving within the narrow range of 103.00 and 103.20. During the last 3 sessions, the greenback has fallen in price by 1%. In addition, the US dollar index also suffered losses against all 6 of its counterparts in the G6 basket. Along with the US dollar, the 10-year Treasury yield slumped to its lowest level in 3 weeks. However, the bearish US currency received support from soaring oil prices. Crude prices also have no clear trajectory and seem to be consolidating their weekly gains. The oil prices are growing on the news about devastating Hurricane Idalia, which swept through the US oil regions in the Gulf of Mexico. Meanwhile, the Asia-Pacific region could suffer significant losses due to Typhoon Saola. Today, China issued the strongest warning of the impending disaster, which may hit the country's southern east coast, where major manufacturing centers are located. And today, China released the reports on manufacturing activity. They showed contraction for the 5th month in a row, albeit at a slower pace. Beijing's stimulus measures and monetary support from the country's central bank are starting to take effect. In addition, China's services sector continues to expand for the 8th consecutive months. As a result, the composite index rose to 51.3 points in August. After hitting a 7-month low in July, this result will likely encourage investors in Asia. Meanwhile, industrial production in Japan turned negative. The July figure fell by a total of 4.8% month-on-month, and this was the 3rd decline since the beginning of the year, driven by manufacturing equipment, electronics and electrical equipment, and information and communications. On a yearly basis, industrial production also fell by 2.5% in July, compared to the 0 in June. Against the backdrop of a significant slump in the Japanese economy, the country's central bank may reconsider its negative interest rate policy. Bank of Japan board member Tayaki Nakamura announced this today. At the same time, the official noted that Japan's deflationary mindset had not yet been eradicated, and the level of demand and price reduction were not dependent on each other. A weak yen is beneficial for exports and tourism, but negative for the domestic market. The government is considering a centralized increase in the income of Japanese households to support companies oriented toward domestic demand, according to Japanese Prime Minister Fumio Kishida. It's hard to say that the markets were impressed by the prospect of raising the minimum wage to 1,500 yen per hour, but by mid-2030. And today the movement of the US dollar and sentiment in China are driving the dollar-yen pair. After falling as low as 145.57 yesterday, the pair was trading slightly higher at 145.90 early Thursday. While the greenback awaits the release of the economic indicators, the yen was able to strengthen slightly within the intraday trading channel. The Japanese currency is still in the intervention territory, showing high volatility, and the next resistance level for the Japanese pair is now at 146.30. The first support level is located near 145.70. Meanwhile, bulls do not favor the antipodian currencies today, despite rising oil prices, which should have supported commodity assets. Nevertheless, the Australian dollar inched to 0.6505 against the US dollar today. The currency strengthened on the back of growth in a manufacturing activity in China. However, these reports could hardly raise optimism about the main trading partner of the Asia-Pacific region. In addition, the decline in inflation is likely to allow the Reserve Bank of Australia to maintain its neutral stance and refrain from rate hikes at the meeting on September 5. The risk appetite is also restrained at the moment, as the recent weak US data does not suggest much economic growth. Therefore, the Aussie dollar pair dropped almost as sharply as it rose today. The pair was trading at the range of 0.6469 and 0.6510 at the beginning of Thursday. After a moderate decline in the previous session, the New Zealand dollar attempted a bullish move today against the backdrop of a weakening US dollar, testing a 0.5975. As a result, the pair's trading range of 0.5945 and 0.5978 turned bearish. Although fresh data showed that New Zealand's business confidence rose to more than a two-year high in August, the country's currency saw no reason to strengthen. The Kiwi closed Thursday's Asian session in the red near 0.5948. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is a key to success in your trading. See you online soon!